Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to today's Bull versus Bear webinar on Tuesday, the 30th of May. Steve Miley on the call here for Trade Day. Welcome, everyone. We're going to go through our kind of slightly different run through in here today for Pseudo Monday. So, given the holiday in both the US and the UK, and kind of national holidays as well in Europe yesterday. We're going to treat this like a pseudo Monday for Tuesday. So we'll take a look at the bigger picture for the week, the shape of the week. Yes, I know you're day trading at trade day, but yes, it's still important to know what's coming up in the week, because the what's depending on where things come out in the week is going to dictate where the volatility pockets are more likely to be. So you could potentially adjust your trading approach, because you're going to expect or not expect either more of a trending day versus a mean reversion ranging day, or it might be that we kind of expect more of volatility to come maybe later in the week. So then the ranges are maybe going to be slightly narrower at the beginning of the week, because we're going to get less volatility as markets await the more significant data points. So let's take a look back before we look forward. So just looking in here, when we can get this from the members area in here, in where the technical analysis reports are. So higher yields and debt ceiling impasse cannot hold the Nasdaq down. The Nasdaq continued to power higher last week, made another new multi-month highs, and higher again in here this morning. We're up about 1% this morning already. And even though we've still got no agreement on the US debt ceiling, but I'll talk a bit about that shortly. FOMC minutes were fairly actually hawkish, if anything, as well, which should have been Nasdaq negative. But the Nvidia numbers really, the Nvidia numbers sent Nvidia shares up 25%. Nvidia are up again this morning. Going to be potentially going to become the first $1 trillion chip company in here, join that $1 trillion club. And so all looking very positive on the big tech side, and tech driving markets higher. UK CPI numbers did drop, but were higher than expected, and we saw hawkish noises coming out of the ECB. But yeah, so Nasdaq leading the US indices higher. European indices were actually lower last week, underperforming, with the German DAX setting back. But the Nikkei continued to push higher into levels not seen since the 1990s. So Europe underperforming, as the European economy continues to underperform. And also, saw last week, German economy has gone into recession for the first quarter of this year, and the ECB retains a more hawkish tone. What else have we seen? The dollar index continued higher, although reversing back lower today. The dollar is reversing lower as we've got some hopefully breakthrough in the US debt ceiling talks in here. So the dollar lower on that. Why is the dollar lower? Well, the dollar ceiling is more of a safe haven. It's been rallying because of the concerns with the US debt ceiling. And gold has been pushing lower as the dollar has gone higher. So what have we got this week? Well, we've already mentioned in here, we had the holidays over yesterday. On the central bank side, we get very, very little from the major central banks, but we do get various Fed speakers, so we're going to keep watching them. And data is certainly loaded to the second half of the week. So we do get US consumer confidence today. So that's going to be the main focus today, this consumer confidence data coming through today. And then it's really from Thursday that things start to get interesting. We get PMI data from S&P Global for the whole planet, plus we get the US ISM PMI data. So this is manufacturing PMI data, comes out usually the first of the month, and it's coming out this Thursday, the 1st of June. US ISM manufacturing and global PMI manufacturing PMI data. We're going to be certainly watching out for that. And then we get the US employment situation, which is the US employment report, including the non-farm payrolls data coming out on Friday. So Thursday, Friday, really all the big data for the week. We do also, though, get now the vote. So it looks like the vote is coming on Wednesday. I'm just going to just jump back actually before we go to that actually. So if we look through in here, going into today, you will see in here the US consumer confidence data. A little bit later today. Where is it? There it is at 10 a.m. Eastern time. So that's the main focus going into the day. And I've kind of mentioned all the other bits we're going to be looking for. The other thing that happened over the weekend was Erdogan won in Turkey. He's now talking about giving gas away for the month of May. So, and they've had inflation's been running at 80% last year. Inflation was up at 80% in Turkey. It's dropped, but still above 40%. And it's saying that this could actually, the fact that he's giving gas away for free for May could actually turn monthly inflation negative. But they've still got a long ways to go. And obviously, this is a once and for all kind of deal, and it doesn't make any kind of necessary difference to long run inflationary pressures that there are still in Turkey. And bond markets actually in Europe rallied. So the core bond markets, like the German government bond market, went higher yesterday as a safe haven, because this is kind of seen as a negative kind of for Europe. So bond markets went higher yesterday. Also, bond markets rallying because of hopes of the breakthrough in the US debt ceiling, which we'll talk about shortly. The Turkish lira continues to get pounded on the downside in here, as this is seen as generally a negative for Turkey at the moment still. So, so that did happen over the weekend. Just wanted to point that out as well. So going to 5 things you need to start your day. So really the focus now going to be on the voting expected to begin from Wednesday on this deal that's been put together by Biden, McCarthy, trying to get Congress to rally around that. However, there are dissenters. So where have I got that one? Yeah, I'll go through it in a second. But there's a summit in China from JP Morgan, a Chinese summit in China. No real shakes there for us. Big tech continue to do well, and in this Market Live Pulse survey showing that market participants still heavily into big tech and looking for that to continue higher, and big tech doing particularly well today. The Nasdaq up over 1% this morning on the back of Nvidia continuing to push even higher. So if we take a look at here, bonds and US futures are up. Bonds rallying on hopes of the US debt ceiling, having been selling off of late. Bonds rallying from the beginning of this week in here on hopes of the US debt ceiling being sorted. So people moving back into, investors moving back into bonds, and US futures there, meaning US equity futures pushing higher as well. So Biden, McCarthy lobbying Congress, the House, and the vote are expected now on Wednesday. And in here, again, look, morning bid, too soon to drink to the US debt seal. Hopes that it's going to get done, but too soon. We're going to have to see. And why we're going to have to wait and see is, look, US futures rise on tentative debt deal. And Republicans, though, speaking out against the US debt still in sign of rocky road ahead. So hard right Republican lawmakers said this one they would oppose the deal. So are they going to get enough votes to get this through? European stocks are steady, but defensive's doing better. So defensive stocks like health, like defense, like consumer staples, like food, are doing better because of ongoing concerns about US debt deal in here. Nvidia leading the way higher, looking to be the first $1 trillion. We mentioned that. Chip company, AI stocks continue to do better. And again, this is following on from that survey, that Markets Live Pulse survey. Big tech rally expected to extend. If we go and take a look at European stocks this morning, they've been kind of mixed. The UK FTSE is down about just under 0.5%. The German DAX is up just over 0.5%, and the French CAC down 1/3. But US stock futures indices, US stock futures indices, that's stock index futures. No, stock index futures. Nasdaq leading the way, driven by Nvidia and AI, up over 1% this morning, with S&P also pushing higher by 0.6. Funnily enough, we're going to take a look at the Fed Watch tool in here. Look at the Fed Watch tool. This is now, let me go back to June first of all. So now June, this is like rocketing up, now. So we're seeing a real high chance of a hike now in June. The market pricing in more chance of a hike than not in June, and certainly a hike by July. Only a 20% chance now of unchanged by July. So 80% chance we're going to see either 25 or maybe up to 50 up by July. And now look at year end, December. Remember, it was only 2 weeks ago, and we were saying, which way is it going to shift? Are the Fed going to become more dovish, or the market going to become more hawkish? I thought we'd meet somewhere in the middle, but why? No, the Fed have stuck to their guns, and the market has capitulated towards the Fed. So in here, what's the chances now? Look, end of year. We only about 2 weeks ago, we were pricing in three rate cuts. We were looking at this 425 to 450 by the end of the year, right? As the highest likelihood, about 60%, I think it was. Maybe we're going to have a quick look. 13th of deck. What's the historical on the 425 to 450? Let me just go and get rid of all of these. 425 to 450. We'll leave. Which one haven't I got there? There you go. So it was as high as over 50% chance, and that was back on the 10th. So 20 days ago. 20 days ago, we were over 50% chance that we would see 75 basis points of cuts, right? And now where we're looking at, well, we'll look at this here. This is unchanged, right? So if we add these up, 34 plus 18, 52, 53 plus the change there, plus another 4, 57% chance that we're going to either be unchanged or higher rates by the end of the year. So only then a 43% chance that the rates that we're going to have lower rates by year end. And we had like over a 50% chance we're going to see them down by 0.75%. Now only less than 40, only around a 40% chance that we're going to see any rate cuts whatsoever. So a big shift in there. And that's kind of the other thing to note in here. We've seen this move back to, this is the yield chart. So we've been seeing yields going higher, mostly because, well, partly because of obviously this, okay, because we've seen generally short end rates expected higher, but also this is the 10-year note. Remember, also yields going higher as bonds have been sold. Remember, yields up is bonds down in price. So bonds being sold because of concerns about the US debt ceiling. But look at this. This is yesterday. So yesterday in here, the market moving back lower in the kind of partial open that we had yesterday, and then again in here. Actually, was that yesterday? No, this was. No, it was yesterday. Excuse me. Yeah, yesterday. So yesterday, lower in yield. Significant move lower. This looks like we've actually reversed now. So this is as bonds have rallied because of and hopes on the US debt ceiling. Let me get rid of this. This is the wrong screen. Let me go here. So if we go and take a look, first of all, at the bond market in here, we'll see 10-year notes significantly up yesterday and then up again here this morning. This is the futures. So it looks like we're reversing that downtrend, right? And whilst we're on this tab, I'll just have a quick nod to gold and oil. So gold rebounding in here. Why is gold rebounding? Well, the dollars, we said the dollar's been on a tear higher, but reversing lower today because it's been part of the reason it's been going up as a safe haven because of the debt ceiling concerns. So dollar coming back down lower in here today. Why is the dollar lower? Because the debt ceiling looks like it's going to get sorted, right? And because of that, we've seen then gold has been selling off, but then gold reversing higher. This could be a bottom in. So looking for some significant turning points, maybe dollar lower, gold higher in here. And if we go and take a look at oil, oh, that's the wrong chart, I believe. No, this is oil this morning. I know it is the oil this morning. So oil lower actually, despite we're going in risk on mode, oil going back lower in here today, sitting on these recent. This still looks really heavy to me. I still think this looks fairly negative overall on the oil side. And nothing really to say on stocks apart from bullish, right? I mean, there's nothing really to say here. This is the ES. So surging rally in here at the end of last week and then marking time through the holiday really session, but then popping higher again in here this morning. And on the NASDAQ in here, big push higher on Friday, massive push higher on Friday, nudged higher in the partial day yesterday and look right making new highs as we speak. Can't be anything other than bullish, right? It just can't be bullish. Now my concern is I don't think it's going to be for Wednesday. We could easily push still higher in here today. I think we're going to have a buy the rumor, sell the fact. So I think what we're going to actually see is once the debt ceiling is passed, be wary of this one tomorrow, guys. If the debt ceiling gets passed, I wouldn't be surprised to see stocks initially spike up and then sell off. Be ready for that one. That could easily happen, okay? A buy the rumor, sell the fact. So watching out for that maybe tomorrow. But today I can only see one-way traffic as higher. All right, I'm going to wrap it up there. Any questions from anyone? No, nothing coming through on the chat. All right, guys. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you with another Bull versus Bear webinar tomorrow.